the top three things this morning. Number one has to go to the U.S. stock market. Number two, the German stock market, the DAX. And number three, the 10-year bond yield. Let's just look at this for what it is. The U.S. stock market yesterday hit an all-time high. All-time, as all of you know, is a long time. S&P 500 up 3.1% now for October alone, which in some years would be a good year. Led by the financials, up 4.9% for October. S&P 500 up 21.5% for the year to date. Boom! That's the number. So at the end of the day, look, you either had this or you did not. And again, I think that not shorting the market was a call in and of itself. So again, that's where we're at. I don't like the way that we got there on the last part, but the market doesn't care about that. The market's going to do what it's going to do. So again, our signal said not being short the market at a bare minimum, being long it. I think if somebody was being friendly, they'd say we got that too. DAX, German stock market. This is what we talked about in Europe. German stock market. If you have to buy a stock market today, hopefully you don't. Today is not the day that you buy, by the way. We don't like buying the all-time high. But if you do on the pullbacks, we want you to be buying German equities. German equities are only up 16% year to date. So from a mean reversion perspective alone, if that is what you're looking at against the S&P 500, you'd like that. And the German spot in terms of where they are in terms of growth, stabilizing and then potentially accelerating, is in a better spot or an easier spot to buy. The U.S. growth story, of course, is now 10 months old, whereas the German one is just getting started. Finally, 10-year bond yield. Look, this is a big threat. So the biggest threat to the market here is Ben Bernanke. And again, maybe not the stock market. The stock market, of course, can go up without tapering, but it's going to be a different kind of a stock market. Don't forget that yesterday's move was driven by what? Low growth utilities were the leader. So again, 10-year bond yields were breaking down. That's a big problem. If Bernanke leans on the curve, and if they confuse, I might even get bullish on bonds. I'm not saying that's good for America. Could be good for markets. It has been obviously for the last 5 years. But do not confuse the lack of tapering with an ongoing economic growth case, because that will be the threat to just that. So that's the top three things this morning.